Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In this video, I'm going to analyze AMD stock to see if it's still one of the best AI semiconductor companies for long-term investing. AMD stock has been down a lot recently compared to the peak earlier this year, so I want to find out whether AMD stock is undervalued now. Just to give you more context, as I predicted in my previous videos, NVIDIA has become the most valuable company in the world in terms of market cap. NVIDIA is even bigger than Apple now. Just to compare, at the time of making this video, NVIDIA's market cap is around 15 times larger than AMD's market cap. Many investors are investing in AMD because it is still much smaller than NVIDIA. AMD's data center business is starting to benefit a lot from the current AI revolution. So many investors are betting that AMD may become much bigger later over time. I always say this in all my videos. The best time to invest in a great company is whenever there's a lot of fear in the market because the stock is much more undervalued during this time. AMD has dipped a lot recently because the market is concerned that AMD is not growing fast enough in the AI data center market. Also, right before I started making this video, AMD gave revenue guidance for the next quarter, which was slightly lower than analyst expectations. Now, many investors are concerned that AMD's AI growth may not be as high as what they initially expected. So in this video, I'm going to talk about AMD's long-term growth prospects in the AI server market and how AMD will compete with NVIDIA going forward. I'm going to talk about whether AMD is still one of the best AI semiconductor companies for long-term investing. I will explain why I believe AMD stock is likely undervalued now. You will learn about these topics in this video. First, I will give you a quick stock portfolio update. Then I will talk about AMD's financials, AMD's biggest risk to consider, AMD's long-term growth prospects in the AI data center market, AMD stock valuation, and whether I will buy AMD stock going forward. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing videos every week that will help you become a great investor. Each video usually takes me more than 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing. So you will know when a company becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before talking about AMD, I would like to give you a quick stock portfolio update. This is to show you my investing strategies over time. Just about a week ago, the entire market was overbought and very greedy because of the Trump trade. Many investors were betting that President-elect Donald Trump would be much more pro-business, allow more deregulations that will benefit banking and many businesses, reduce corporate taxes, which means many American businesses will earn higher profits, and impose much higher tariffs on foreign goods, especially from China, to protect American businesses. Now the market is back to neutral again because the market is concerned that the Fed may slow down lowering interest rates if inflation is not coming down fast enough, or if Trump's upcoming policies will cause higher inflation. Now let me show you one of my stock portfolios. This portfolio is separated into 3 different accounts. This is the first account. This account has been performing very well compared to the S&P 500 because I have invested in several outstanding businesses such as MasterCard, Microsoft, Visa, Amazon, TSMC, Google, Meta, and ASML. All of them are the best businesses in their industries. They are all near monopolies. It's nearly impossible for competitors to compete with them. I am planning to hold them for the long term and not trade them for quick profits so that these outstanding businesses can grow much more over time. This is the second account. The story is the same as the first account. I have invested in several outstanding businesses such as Apple, Google, Visa, TSMC, Microsoft, NVIDIA, and Amazon. Some of them have already become multi-bagger stocks because I've been holding them for many years. In the past, I've made many mistakes selling many stocks for quick profits. For example, I made the mistake of selling Nvidia, Amazon, and Tesla for quick profits. If I had held them until now, my gains would have been much larger by now. Now my plan is to keep holding the best businesses for many years, ignore all the market noise, and let them grow much more over time. This is a third account. This account is much newer than the two other accounts, so it will take longer for these companies to become multi-bagger stocks. I said this in my previous videos. I think this account is too diversified. There are too many companies in this account. I would like to make this account much more focused on the top 10 companies, just like the two other accounts. Going forward, I will likely sell some of these outstanding companies after they grow much more. And if the market is too overvalued, I will likely wait for bigger dips before buying more stocks again. Let's talk about AMD's financials and its most important businesses. Then I will talk about AMD's biggest risk to consider. First of all, it's very important to understand AMD's businesses. AMD is the second largest GPU maker in the world, right behind NVIDIA. AMD is also one of the two leading x86 CPU makers in the world. Intel is the other x86 CPU maker. AMD designs and makes computer processors, gaming processors, embedded processors, and related data center technologies. AMD's primary products include CPUs, APUs, GPUs, DPUs, FPGAs, and chipsets for personal computers, servers, and embedded systems. In the CPU market, AMD competes with Intel in making x86 CPUs. AMD also competes with Qualcomm and other companies that make ARM-based processors. In the GPU market, AMD mainly competes with NVIDIA in making consumer GPUs, AI GPUs, and AI supercomputers. AMD has these four major business segments: data center, client computing, gaming business, and embedded business. In this video, I will focus on AMD's data center business and client computing business because these two businesses will have the biggest growth opportunities for AMD going forward. According to the most recent Q3 financials, AMD's total revenue was up 18% year over year. Its non-GAAP gross margin was 54%. Its non-GAAP operating income was up 34%. And its non-GAAP operating margin was at 25%. Here is an interesting thing. If you compare AMD's financials to Intel's financials in recent quarters, you will notice that AMD has been taking a lot of market shares and revenues from Intel. Moreover, you will notice that AMD is much more profitable than Intel, and it has been growing much faster than Intel in recent years. Here are the biggest growth opportunities for AMD. Just like NVIDIA, the data center business will be the biggest growth driver for AMD going forward. For example, in the most recent quarter, the data center business contributed about 52% of AMD's total revenue and around 60% of AMD's operating income. The data center business also had the highest growth rate compared to the other business segments. This shows that AMD is starting to generate a lot of revenue from selling AI GPUs. AMD's data center business will continue to grow much faster than the other business segments because of the very large demand for AI GPUs and AI supercomputers that are needed to train and infer AI models and AI applications. I will talk more about this later on in this video. The client computing business will continue to be the second biggest growth driver for AMD because there is a very large demand for high-performance CPUs for consumers and professionals. Consumers like to buy high-performance gaming CPUs and upgrade their gaming PCs once every 4 to 5 years. This is one of AMD's biggest risks. AMD's gaming business is not as competitive as AMD's gaming business. AMD's gaming business is also very cyclical. AMD makes the custom processors for the PlayStation 5 and the Xbox Series consoles. This means AMD's gaming revenue is largely dependent on PlayStation sales and Xbox sales. The current gen PlayStation 5 and Xbox Series X consoles are around 4 years old. This means Sony and Microsoft will need to release their next gen consoles before AMD can earn high revenues from selling custom processors to Sony and Microsoft. Also, AMD cannot compete with NVIDIA in the high-end GPU market. AMD has been well behind NVIDIA in the discrete GPU market for many years already. If you're a PC gamer like me, you will know that most PC gamers would rather buy NVIDIA GPUs than AMD GPUs if they have the money. The biggest reason is that NVIDIA always makes the best high-performance GPUs that are well optimized for most games. Most game developers like to optimize their games for NVIDIA GPUs because NVIDIA has the most gamers. NVIDIA owns more than 70% of the discrete GPU market. NVIDIA has more than 300 million GeForce users in the world. This is why you can see AMD's gaming revenue was down a lot in the most recent quarter here. AMD cannot compete with NVIDIA in the high-end GPU market. AMD can only compete with NVIDIA in the mid-range GPU market. This is another risk we have to consider. At the time making this video, the overall semiconductor market outside of AI is still going through an inventory correction. The entire semiconductor market outside of AI is still gradually recovering. AMD's embedded processor business has been in a downward trend for several quarters already. According to AMD, many customers are still adjusting their inventory because the end market demand for these embedded processors is still low. AMD expects that its embedded business will recover more in 2025, but the recovery will likely be very gradual and slow. Again, AMD's biggest growth drivers will be its data center business and its client computing business. The biggest headwind is that AMD's gaming business and embedded business will likely drag down AMD's overall revenue and net profit growth over the next several quarters. For example, in terms of outlook, AMD's total revenue is expected to grow by around 22% year over year for the next quarter. This expected revenue growth is still slightly lower than Wall Street's initial forecast. One of the biggest reasons that AMD's gaming business and embedded business will likely take longer to recover. As of now, AMD is also competing with companies that make ARM-based processors for Windows PCs. According to several sources, NVIDIA is planning to release its ARM-based APUs in 2025, which will compete directly with AMD's high-performance APUs in 2025 and onward. Typically, ARM-based processors are a lot more energy efficient than the x86 CPUs from AMD and Intel. Of course, the downside is that many apps and games do not work well on ARM-based processors. Developers will need to optimize their apps and games to make them work on ARM-based processors. This is my prediction. I don't think these ARM-based processors from NVIDIA and Qualcomm can take away much of AMD's market share in the CPU market. The main reason is that most Windows apps and games are made for x86 CPUs. Based on what I know, it's very time-consuming and costly for developers to optimize their Windows apps and games for ARM-based processors. And if most people are still buying PCs with x86 CPUs, it doesn't make sense for developers to optimize their apps and games for ARM-based processors. I want to show you these past financials. They show that AMD's business is very cyclical. In fact, most semiconductor companies are very cyclical. Over the past 10 years, AMD has had fairly consistent revenue growth in most years. However, if you look at AMD's past operating income growth, free cash flow growth, and free cash flow margin, you can see that AMD's business is very cyclical. Typically, AMD earns the most profits whenever there's a very large demand for high-end CPUs and gaming GPUs, such as during the peak of the pandemic in 2021. However, whenever there's a large correction in the PC market, such as in 2022 and 2023, AMD's operating income and free cash flow would drop significantly. Now the PC market is recovering again. This is why AMD's client computing business has been growing at double-digit rates again in recent quarters. This is my prediction. Starting in 2025, many people will need to upgrade their PCs because Microsoft will stop supporting Windows 10. This will force many people to buy new PCs that will have Windows 11. This will benefit AMD's client computing business. Also, many gamers bought their gaming PCs during the pandemic 4 years ago. Now, many of them are planning to upgrade their gaming PCs in 2025 or 2026. This is why I think we can expect that AMD's client computing business will likely grow a lot more in 2025 and 2026. I believe the PC market will recover more in 2025 and 2026 because many people will need to upgrade their PCs. At the time making this video, AMD has a fairly strong balance sheet. For example, in the most recent quarter, AMD had around $4.5 billion in cash equivalents. Just to compare, AMD had around $2.24 billion in total debt and long-term operating lease liabilities. This means AMD can pay off all its debt and operating lease liabilities in advance and still have approximately $2.26 billion in cash left. Let's talk about AMD's long-term growth prospects in the CPU market and the AI data center market so you will know whether AMD is still a great company for long-term investing. As I mentioned earlier, I believe the client computing business and the data center business will be the biggest growth drivers for AMD going forward, offset by AMD's gaming business and embedded processor business. This is the first growth catalyst for AMD. I believe that AMD will continue taking market shares from Intel in the x86 CPU market in upcoming quarters because of several reasons. First, if you have been following the CPU market, you will know that most of Intel's high-end CPUs are not competitive at all compared to AMD's high-end CPUs. At the time of making this video, most of Intel's consumer CPUs and server CPUs need to use a lot more power to match AMD CPU's performance. This is why Intel has been losing a lot of market shares to AMD in recent years. Second, Intel has had many execution issues, manufacturing issues, product delays, and even CPU instability issues for a while already. Based on what I know, many of these issues have not been resolved yet. Now Intel is facing financial problems because Intel does not have enough capital to support both its Intel products business and its Intel Foundry business, which is very capital intensive. Third, Intel is facing a lot more competition than before. Intel is trying to compete with everyone in both chip design and mass chip manufacturing. In fact, Intel has been behind in every major business for several years already, including consumer CPUs, data center CPUs, consumer GPUs, AI accelerators, AI supercomputers, process node technologies, and mass chip manufacturing. Now, Intel is trying to compete with AMD, Qualcomm, and ARM holdings in the CPU market, NVIDIA and AMD in the GPU market, and TSMC in the semiconductor foundry market. And fourth, based on one, Intel is 1 to 2 generations behind TSMC in process node technologies. Intel is well behind TSMC in the mass manufacturing of advanced chips. In fact, Intel also uses TSMC to manufacture some of its chips. TSMC manufactures around 90% of the most leading-edge chips in the world. AMD also uses TSMC to manufacture its leading-edge chips. This is my prediction. If we consider all the issues Intel is facing right now and how behind Intel is in every major business, I believe that AMD will continue to gain more market shares from Intel in the CPU market over the next several years. Here is another indicator that shows AMD will continue gaining more x86 market shares from Intel in the upcoming quarters. If you search for the best-selling CPUs on Amazon, you will notice that almost all the top 10 CPUs are AMD CPUs. This shows how behind Intel's consumer CPUs are compared to AMD. In the x86 server CPU market, I believe AMD will continue gaining more market shares from Intel because AMD's latest EPYC server CPUs are still much more energy efficient and more performant compared to Intel's latest Xeon server CPUs. Here's the interesting part you should know. According to the latest data here, Intel still has around 76% of the x86 server CPU market. In comparison, AMD only has around 24% of the x86 server CPU market. But this is not the real story. The real story is that Intel has been selling its server CPUs at lower prices than AMD to maintain its market share because Intel knows that its latest Xeon server CPUs are not as competitive as AMD's latest EPYC server CPUs. This has been the trend for many quarters already. According to the latest data here, AMD's data center revenue was actually higher than Intel's data center revenue, even though Intel still had around 76% of the x86 server market. Now let's take a look at AMD's biggest growth catalyst. Just like NVIDIA, I believe building AI GPUs and AI supercomputers for data center customers will be the biggest growth driver for AMD going forward. Here's why. At the time of making this video, there's an enormous demand for training and inferencing large language models and frontier AI models. All the leading AI companies such as Google, Microsoft, Meta, Amazon, OpenAI, xAI, and Anthropic are racing to build their next-gen frontier AI models. As stated by Jensen Huang from NVIDIA, he said, the first person to the next plateau gets to introduce a revolutionary level of AI, so the second person who gets there is incrementally better or about the same. And so the ability to systematically and consistently raise to the next plateau and be the first one there is how you establish leadership. All these foundation AI models and AI applications need the most powerful and most energy efficient AI GPUs and AI supercomputers from NVIDIA. NVIDIA has a near monopoly in the AI GPU market, or what I call the AI server market. In fact, NVIDIA has around 90% of the AI server market. It is nearly impossible for competitors to compete with NVIDIA in the AI server market because NVIDIA dominates in both the AI infrastructure and the AI software stack. Moreover, NVIDIA has the largest developer base and the most users that support NVIDIA's CUDA. CUDA is NVIDIA's proprietary parallel computing platform and programming model that allows developers to use NVIDIA GPUs for general-purpose computing. CUDA allows developers to run very compute-intensive AI workloads such as AI training and AI inferencing using NVIDIA GPUs. CUDA only works on NVIDIA's GPUs. This means most developers and AI companies will continue to invest in NVIDIA's AI GPUs and AI supercomputers if they want to use CUDA. Here's the situation right now. The market does not want NVIDIA to have 100% of the AI server market. The market needs another major competitor that can compete with NVIDIA. The largest cloud service providers and AI companies such as Google, Microsoft, Amazon, Meta, and OpenAI can make their custom ASIC AI accelerators instead of relying 100% on NVIDIA. But these custom ASIC AI accelerators are meant for very specific workloads. More importantly, they do not have a very well-established AI software ecosystem like CUDA. Based on what I know, optimizing AI applications on these custom AI accelerators takes a lot of work. So most developers will still choose to invest in NVIDIA's CUDA and AI systems, even if they're very expensive. Based on what I know, AMD is the best alternative to NVIDIA's AI GPUs and CUDA. If AI companies don't want to invest in NVIDIA's AI GPUs and CUDA, since they are very expensive, they can invest in AMD's AI GPUs and open source ROCm, which competes with CUDA. AMD is NVIDIA's biggest competitor in the discrete GPU market. This has been the trend for many years already. In the AI server market, I believe it will be a two-horse race between NVIDIA and AMD, similar to the discrete GPU market. This is my prediction. I believe NVIDIA will continue dominating and maintaining around 80% of the AI server market because of CUDA. In comparison, AMD should be able to capture around 10% of the AI server market, which will be similar to the discrete GPU market. AMD CEO Dr. Lisa Su gave this forecast recently. She believes that the AI GPU market will grow from $45 billion in 2023 to as much as $500 billion a year by 2028. Of course, I think this forecast is likely too optimistic, but I think this shows that AMD will have a lot of growth opportunities in the AI data center market going forward. AMD's total addressable market is much bigger now because of the large demand for generative AI applications from tier AI models and AI supercomputers. Let me show you AMD's growth strategy right now. Similar to NVIDIA, AMD is planning to have a one-year product cadence. AMD is planning to release one new AI GPU every year in order to compete with NVIDIA and capture more market shares in the AI server market. For example, AMD's upcoming MI325X will compete with NVIDIA's H200 GPU. MI350 will compete with NVIDIA's Blackwell platform in 2025. And MI400 will compete with NVIDIA's Rubin platform in 2026. Here's the important part you should know. AMD is copying NVIDIA's AI data center strategy. Before, AMD was focused on building the best AI GPU that could compete with NVIDIA's Hopper platform in AI inferencing. Now, similar to NVIDIA, AMD is moving to build the entire AI infrastructure, which includes the data center CPUs, the AI GPUs, the interconnects that connect all the AI GPUs together, the DPUs, networking switch and devices, Ethernet, ROCm software stack that competes with CUDA, liquid cooling systems, and rack scale AI systems. AMD knows that it's not possible to compete with NVIDIA by just building AI GPUs or AI accelerators. The only way to compete with NVIDIA is to build the entire AI infrastructure and improve its open source ROCm software much more. This is why AMD is planning to acquire ZT Systems for $4.9 billion, which will close sometime in 2025. ZT Systems specializes in designing and building rack-scale servers and AI systems. This year, AMD expects to achieve $5 billion in AI GPU sales. Analysts have estimated that AMD's total value should be around $26 billion this year. According to analyst estimates, NVIDIA's total value is expected to reach around $126 billion this calendar year. Around 85% of NVIDIA's total value is coming from its data center business. So based on my estimate, AMD should be able to capture around 4% to 5% of the AI GPU market this year. In the long run, I believe AMD should be able to capture around 10% of the AI server market, which will be very similar to the discrete GPU market. Let me show you the most important parts of AMD's recent earnings call. AMD's management talked about the company's long-term growth prospects in the AI data center market, how customers are using AMD's MI300X for more internal workloads, and why 2025 will likely be a growth year for AMD.
Microsoft and Meta expanded their use of MI300X accelerators to power their internal workloads in the quarter. Microsoft is now using MI300X broadly for multiple Copilot services powered by the family of GPT-4 models. Meta announced they have optimized and broadly deployed MI300X to power their inferencing infrastructure at scale, including using MI300X exclusively to serve all live traffic for the most demanding Llama 405B frontier model. We are also working closely with Meta to expand their Instinct deployments to other workloads where MI300X offers TCO advantages, including training. In the data center alone, we expect the AI accelerator TAM will grow at more than 60% annually to $500 billion in 2028. To put that in context, this is roughly equivalent to annual sales for the entire semiconductor industry in 2023. And then to your overall question about 2025, at a high level, look, we feel very good about the market. From everything that we see, talking to customers, there's still significant investment in trying to build out the infrastructure required across all of the AI workloads. And then within that, our product portfolio is getting stronger with the annual cadence, launching 325 later this quarter and 355 in the second half of next year. And then in terms of customers, our customer engagements are actually broadening quite well. So and it's broadening in two ways. So certainly cloud, our largest cloud customers are broadening the set of workloads that they're running on AMD Instinct. And we're also very engaged with a number of large cloud and enterprise customers that are actively working with us on optimizing their workloads. And we would expect those would be good opportunities for us over the next couple of quarters as well. And going into the next few quarters, going into 2025, I think we expect that the environment will continue to be tight, but we've also planned for significant growth going into 2025. And so we feel good about our overall supply chain capability. So certainly from the $5 billion that we're talking about, the early traction has been primarily with inference, just given the strength of the product portfolio. MI300 is very, very well optimized for inference, given the memory capacity and memory bandwidth capabilities. But we have had some training adoption, and we expect that will continue to grow as we go through the next few quarters. And so, as we let's call it fast forward a year, I would say we would have a fairly balanced portfolio between training and inference.
Let me show you these consensus estimates from Seeking Alpha, so you will know AMD's expected growth rates going forward. In terms of revenue estimates, AMD's revenue growth is expected to accelerate again between 2025 and 2028. I think the main reason is that AMD will likely capture more market shares in the AI server market over the next several years. Moreover, AMD will likely capture more market shares from Intel over the next several years. Also, the PC market is expected to recover more over the next 2 years. In terms of EPS forecast, AMD's EPS is expected to grow faster than its revenue growth over the next several years because AMD's operating margin will likely improve more going forward. Let's look at these 4 PE ratios. This year, AMD's 4 PE is expected to be around 42, which is reasonable for a high-growth tech company. Next year, AMD's 4 PE is expected to be around 27, which is very low for a high-growth tech company like AMD. I believe this suggests that AMD is likely undervalued now. Let me show you this investing application I'm developing with a friend. This is a preview. The orange line here is AMD's fair price. The blue line is AMD's stock price, and the green dotted line is AMD's average price target over the next 12 months. At the time making this video, AMD stock is actually below its orange fair value line. Also, based on analyst estimates, AMD is expected to recover to around $184 per share over the next 12 months. I believe this indicates that AMD stock is likely undervalued now. Let me show you this intrinsic valuation model here. I always use this intrinsic valuation model to calculate each stock's intrinsic value. You can use it to calculate AMD's intrinsic value, so you know when AMD stock becomes undervalued, fairly valued, or overvalued. If you want this intrinsic valuation model, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define AMD's intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 10.5% here. You can use a higher discount rate here if you want to be more conservative. Based on the biggest risk and the long-term growth prospects I talked about earlier, I believe AMD's revenue will grow between 11% and 15% this year. This is very close to the consensus revenue estimates. After that, I believe AMD's revenue will grow at a compound annual growth rate or CAGR between 10% and 15% each year over the next several years. This is much more conservative than the consensus revenue estimates I showed you earlier. I used a long-term growth rate of 9% to calculate the terminal value. I think this is very reasonable for a high-growth semiconductor company like AMD. Typically, the overall semiconductor market, excluding the memory market, grows by around 9% to 10% each year over the long term. If you want to be more conservative, you can use a lower long-term growth rate to calculate the terminal value. Over the next several years, I'm assuming AMD's free cash flow margin will improve gradually over time. Let's go over these 3 case scenarios: worst case, normal case, and best case scenarios. Under the worst case scenario, we forecast that AMD's revenue will grow by around 11% this year. After that, we forecast that AMD's revenue will grow at a CAGR of 10% each year over the next several years. Then AMD's intrinsic value should be around $215 billion for the entire company, or $131 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we forecast that AMD's revenue will grow by around 13% this year. After that, we forecast that AMD's revenue will grow at a CAGR of 12.5% each year over the next several years. Then AMD's intrinsic value should be around $238 billion for the entire company, or $146 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we forecast that AMD's revenue will grow at a CAGR of 15% each year over the next several years. Then AMD's intrinsic value should be around $264 billion for the entire company, or $161 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, AMD's intrinsic value should be around $146 per share. I also use a forward sales valuation model to estimate AMD's intrinsic value, which should be around $254 billion for the entire company, or around $155 per share. If we take the average of both valuation models, I believe AMD's intrinsic value should be around $151 per share. Just to compare, Morningstar has given AMD a slightly higher fair value of $160 per share. This means I believe AMD is slightly undervalued now at the time making this video. So will I buy AMD stock? My answer is yes. I will likely buy more AMD shares over time as long as AMD is still an outstanding company. I like to buy only when the stock is likely undervalued. To reduce risk, I will likely limit AMD's weighting to around 3% of my stock portfolios. I believe there are 2 growth catalysts that will benefit AMD going forward. First, I believe AMD will continue taking market shares from Intel in the x86 CPU market over the next several years. Intel does not have the resources to compete with everyone, including NVIDIA, AMD, Qualcomm, ARM Holdings, Apple, and TSMC. Second, I believe AMD should capture around 10% of the AI server market over the long term, which will be similar to the discrete GPU market. I believe NVIDIA will still dominate and maintain around 80% of the AI server market because of CUDA. The market needs another major competitor that can compete with NVIDIA in both the AI server market and the discrete GPU market. I believe AMD is the best alternative to NVIDIA. Now, all these are only my opinions and my analysis that's based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.